Welcome, everybody. Hope you're having an awesome day today. For those of you tuning in, what the hell's going on with mortgages and real estate? It's all over the place. There's a lot of uncertainty, but dude, Jim, the market seems to be steady, and at least on the mortgage side, which is a surprise.
Yeah, it's feeling good right now. We're seeing a lot of activity. Remember, consumers want confidence and stability to make good long-term decisions. When there's unknowns or there's misinformation out there, people normally just say, I'm not going to do anything. I'm going to hold off until things get better, or there's more of a clarity perspective going forward. So we're seeing a ton of activity. Yesterday, we had a price in our marketplace, which is about a $1.4 million price point, which is middle market where I live. There was 17 offers on the property, and it was just a regular home. So we're seeing tight inventory still. We're seeing buyers come back. They want to make moves. They want to, weather's getting good. They want to get into maybe a new school district before the end of the year. Rates being stable around 6% is giving people that confidence that it is a good time to buy,
Yeah.
especially if they were looking a year ago when rates were 6.5 to 7%. So that difference is really making a difference for people to still want to look to buy their next house if they can find one.
Yeah, I see that definitely. All right, what's on your topic today?
So
Millionaires,
to
billionaires. What's this?
yeah, yeah, billionaires. So there's a great article that came out that Elon Musk and Zuckerberg and everyone else gets loans.
Yep.
They leverage properties.
Hmm.
So I always like to think about leveraging things. Leverage is a good word when it comes to real estate and financing. Leverage can be used as a bad word if you're leveraging someone for a need or something like that. So
Yeah.
when you look at leveraging things, you always want to look at the opportunity cost of either getting financing or not having financing. So even the smartest billionaires in the world understand the power of leverage. So, for example, Zuckerberg and Elon Musk, they have 60 to 70 million dollars of outstanding mortgage debt on their properties because they understand leveraging. If they can borrow money at 6%, maybe even less because they have a lot of wealth, that's a very good way of looking at saving their money to keep in other alternative investments. So whenever you're looking at buying something, you want to look at, do I put more money down or do I leverage a property higher? And it really comes down to two things. What's the payment going to be, right? If you're payment conscious, and what is the opportunity cost if I don't sell this stock or sell this bond and not put that money down in the house? Can I leverage differently? So we're seeing people put less money down right now. So if someone that may have 20% to put down, they're putting down 10% because the interest rates are relatively the same.
Yeah.
And we know that every house you buy in a good area probably isn't perfect. So we want to make sure people have a budget for those improvements because it opens up their mind to think of a great location house. Maybe it's older, maybe it's a rancher, whatever it might be. It allows them to have the ability to improve that property to what they want it to be. That's a big leverage point for them because they can outbid potentially other buyers because they have that reserve of 10% to fix up the kitchen, to remodel the bathroom, to expand the closet. So that's a big thing to think about when you're buying a house. 20% down is great, but you don't need to put 20% down. Think about what you want to do with the property you're buying. It's probably not in perfect shape because if it's in perfect shape, you're going to have more competition. There's going to be a higher price you pay for that. So sometimes it's better to buy an older home and do those improvements, saving that 10% difference if you have that.
All right. What about mortgage insurance? Because that keeps coming up when people are like, "But I had to put 20% down or more."
Yeah,
How do you
nowadays,
get around that?
yeah, the myth of mortgage insurance. Think about it. There are two types of insurance.
Shoot.
Lenders put their own insurance on their loan portfolio, number one. So what they've done is the
Okay.
margin on the amount that they're charging the consumer to do that has gone down. So people are getting more and more savvy with understanding there are better ways of doing that. So mortgage insurance can be avoided by either buying out of it up front. So you can actually pay money up to 2% to buy out of it, or you can get a higher interest rate and have it be blended into the rate. You don't want to pay mortgage
Mm.
insurance because it's not a deductible item like property taxes and interest are. So you might be in a situation where you actually get a little higher rate, not pay mortgage insurance, and have a loan of 90% because that's a better approach because you can deduct the interest potentially, talk to your
Yeah.
CPA, obviously, versus paying a junk fee for the next 3, 4, 5 years. So that's the way you can avoid mortgage insurance by getting a little bit higher rate or buying out of it up front. You can even have the seller give you a credit to buy out of that for you also, which is kind of cool.
Interesting, man. I like that. I like that approach. All right, so let's say you were going to buy a house, you personally, right?
Yep.
Would you leverage the equity of a different house that you own to buy another house, or would you take out a brand new loan?
Yeah, you're going to basically always try to take out a brand new loan because there's an IRS rule called acquisition indebtedness. And what that means specifically is when you buy a house, you have up to 90 days to put a mortgage on that property. If you don't establish a mortgage in the first 90 days, for the life of ownership of that property, you can't deduct any mortgage interest. So people pay all cash, that's great, but they should be smart and think about leveraging that
Hmm.
cash and getting that money back within a 90-day period of time. And that's known as delayed buyer financing. So you always want to talk to your CPA, your financial planner, and your loan officer about the right way to structure your debt to make sure that you're leveraging your debt correctly and that you have enough reserves to make those improvements if you're buying a house that needs a little help. So, are you seeing a lot of properties now that aren't perfect out there? Because when inventory is tight, it seems like there's a lot of
It depends
ugly
on the
houses, so to speak.
Yeah, it depends. I think what we're starting to see more is anything that's not when inventory is tight, anything that's not selling is because it's way overpriced or because it requires a lot of work, and sometimes it's both, right? They're not lowered
Okay.
enough to sell. But in areas that have a lot of inventory, parts of a lot of parts of Florida and a lot of parts of Texas, we're finding something different, which is a lot of new construction there that's underpricing their brand new homes to compete with everything that's already out there. And then you layer on top of that in areas like Florida, where you have a lot of condos, right, on high rises, and those are extremely underpriced because of the HOA situations and insurance. So there's a lot of problems going on right now in those areas. But dude, in California, most of our areas pretty good. Like it's average in a lot of areas. Some areas are blowing up and very few areas are upside down. Very few, which is
Absolutely. And
cool to
it goes
see.
back to the supply and demand, right? We know that there's a lot of people that want to live in nice areas that have good weather or have good schools or have the jobs that pull them there. And so, as you know, real estate is very localized and so is
Yeah.
lending. So we're really lucky to be leaders in our markets that allow us to stay astute and affluent with what's the demand, what's the interest, how to get the best opportunity for both buyers and sellers. So I'm excited about the future. We've seen about a 230% increase on our application volume in the last 30 days. So that's a really good sign that people are wanting to do something. And we are going to see a little bit of interesting things out in the marketplace with this oil issue. Oil, with oil prices higher, that like we mentioned last time, it does increase potentially the interest rate because of inflation. So right now is a good time. I'm a big contrarian. I love doing things when everyone's telling me to go this way, I'm going that way. If
That's
you can
true.
stand out in the crowd, you're going to have a much better chance of getting something done. So if you're a realtor and have a person waiting to put their house on the market, might be a good time to get it on sooner because you have less competition. If you're a buyer, if you think rates are going lower, get in front of that and buy before the rest of the people come into the marketplace. Because once news hits, it's already too late, as we know. So
Very true. Good point. Jim, thanks, buddy. I'm always learning from you, man. So thank you for dropping
vice
some good
versa, my
knowledge.
man. Vice versa. Right
That was
back at
good.
you. Appreciate
Thanks,
you.
everybody.